Okay, so in this video, you'll learn about the trend continuation trading setup. So just to share with you visually how this looks like. So a trend continuation trading setup is quite straightforward. It's like basically entering in an existing trend, right? So you usually enter on the break of this highs in anticipation of higher prices. So most of the trend continuation setups you see, right, are typically, or rather they typically occur in a strong trending markets, because if you have studied the earlier videos, I said that in a strong trending markets it's difficult to enter on a pullback because the trend is strong. So usually the best course of action is to simply trade the break of the highs, right, in an uptrend, and break of the lows in a downtrend. So why does the trend continuation trading setup work? Well, it's quite straightforward because the market trends. Okay, so it's a fact of the market that the market trends, right? From a could be a strong trend, healthy trend, or a weak trend, and we have no idea how far the trend will take us. So whenever the market is trending, right, the logical thing to do, right, is simply to trade with the trend, as that is the path of least resistance. So to share with you, the things I look for is number one, strong preceding momentum. So what I mean by this is that, for example, right, the market is in a range, and if it does break out, okay, this portion here, this trending move, right, I want it to be strong. So the body of the candles should be larger than usual, and the pullback, right, should be shallow with a smaller bodied candle. So this is what I mean by strong preceding momentum. This portion over here must be strong. Okay. Second thing I look for is a build up. So it can either be a shallow pullback, where the candles are very narrow, very small, or it could be a build up where it gets tighter and tighter. And the third thing, is to simply trade the breakout. Here are a couple of tips that I want you to bear in mind. The best trend continuation trades occur when the market just break out of the range. So as what I have drawn earlier, when the market just breaks out of the range and it's just flirting here, forming this type of a very weak pullback, a bearish flag, these are typically the best breakouts to trade, because right, traders who are watching this, they are not in the trade, so there is the fear of missing out. So whenever the first pullback come, maybe it's here or maybe it's somewhere over here, right, a lot of traders would pile onto this trade to try and get on board the move in anticipation that the trend will continue. All right, so the best trend continuation trade, right, as I've mentioned, is when the market just break out of the range. Another thing to take note is that you don't want to be shorting the breakout, right, when you are, for example, there is a trend channel and you don't want to be shorting it near the lows of a trend channel. So what is a channel? A channel is very simple. Let's say the market is in a trend, something like that. You can actually connect it and draw it, connect it with the channel. Right, the drawing is quite poor. Let me do this again. I draw the channel first. I think it would be a better idea. All right, this is a trend channel, and the market is contained within the channel. So what I said, right, is that, let's say for example, this is a long setup, right? You want to trade the break of this highs, right? This market over here is near the highs of the channel, right? You don't want to go long over here because there's a good chance that this market could reverse back, lower. Similarly, you don't want to go short near the lows of the channel, something like this, right? You don't want to go short near the lows of this channel over here. So the key thing to take note of is that whenever you're entering a trend continuation trade, you want to see if there's any channel in place. If there isn't, right, then you don't worry, you don't have to worry too much, and you can just take the trade if the setup presents itself. So with that said, now let's look at a few examples. Okay, so you can see that over here, this is a S&P 500. The market has been in the range. So what happened is that when the market first broke out, which is this one over here, you have a weak pullback. I won't really consider this a build up, as it's not really very tight, right? You can see that it's a pullback, but it's not a very I would say a trend reversal type of pullback, right? The trend reversal type of pullback is this type of candle over here, where it's very large bodied candle, very large bodied candle. So when you see the pullback, right, you want it to be weak, small bodied candle like this one over here. Okay, so this you can actually go long on the break of this highs over here. This one over here is what I call a build up. Notice this build up, the range getting tighter and tighter. All right, it can go along with a buy stop order above this highs to get on board the trade. All right, this is somewhat another build up that is formed over here as well. So moving on, let's see. So this is the 4-hour chart of crude oil, and you can see that there is another trend continuation setup over here, right? And it's actually somewhat of a trend continuation plus breakout, because you can see over here this market is pretty much in a range, in the existing uptrend. So you have this build up that is formed over here, nice and tight, before the market breaks out higher. And if you look at the crude oil in 2014 during the collapse, right, there's a lot of I would say nice opportunity to get short on based on just straightforward trend continuation trades. So I'll say again, when I mentioned earlier, right, when the market just broke down, so let me just draw over here, right, I would say this is the area of support. So you can see that this over here is the first pullback, right? The first pullback, and this pullback is relatively weak. Look at the size of the pullback. The size of the candle is very small compared to this strong preceding momentum move, right? So these are possible trades that you can look to short towards the downside. Okay, so you can see that this move is the start of the sell down basically on crude oil. So over here you can see that there is another build up that is formed over here. So one thing I want to highlight, right, is that whenever there is a build up form, right, what I like to see is opposing candles against my initial trade direction. So let me explain. So for example, right, I'm looking to short this market, say for example, looking for a build up. So when I see this type of candle, right, bullish candle, right, this is a good thing, right? Because what happens is that it will entice traders to get long, right? Because they say, oh, look, there is a bullish hammer, right? There is a bullish piercing pattern, stuff like that. And they will look to get long and have their stop just below the swing low, right? But of course, you're smarter than that. You know that the trend is down and you don't want to be fighting against the trend. And from the looks of it, you know that this is still somewhat looking like a build up. So what you can do is you can place a sell stop order just below this low, right? And, take the trade against this group of traders who are long. Okay, and I really like this type of candle that go against the trend, because it will bring in or suck in more traders to take the opposing side of the trade. So when they do cut their losses, right, their stop loss, right, when triggered, right, would fuel further price decline, since this is a downtrend. Okay, so this is what I like to see, right, like opposing candles coming in against the direction of the trend during the build up that is formed. So I believe there's another example like this one over here. This is nice as well. So you can see here, again, I'm not looking to trade against this individual candle. I'm looking at it in the context of the picture, right? Number one, you have an existing trend, right? Then you have this potential build up that is being formed. And notice that, there are 1, 2, 3 candles, right, against the trend. This is nice, right? Because this will, suck in traders to go long with their stops below this low. And this, I find that this type of build up that is being formed with this type of opposing candles, right, are usually trade that have a higher probability of working out. Okay, so this is something that is good to take note of, right? And it's something that I pay attention to. Okay, so this is the Brent crude oil trade. And one thing that I want to share that I've not shared is basically the trend channel issue that I spoke about earlier. Okay, so let me just walk you through an example of what I mean by that. So for example, right, if you look at this one over here, this market pretty much is you have this channel drawn over here on this dollar Canadian yen. Okay, let me just draw it out. Okay, so this is what I mean by a channel, right? Now that it's on the charts, you can see it and understand it better. So at this point, right, this is what I said by, do not, short the market where it's at the lower end of the channel. So at this point, right, you may look at this and say that perhaps this could be, somewhat like a build up, maybe a descending triangle, right? One of the chart patterns that we spoke about in the earlier lesson, right? And you may be tempted to short this, but be aware is that you are shorting near the lows of this channel. So there's always a good chance of the market reversing back higher. So this is why I say avoid shorting near the lows of the channel or going long near the highs of the channel. So alternatively, right, if you just imagine this to be a build up that is formed instead, right, a type build up, again, I will not be inclined to short this build up that is formed over here, because why? The market is at the lows of this channel. So you can just imagine this, right, if there's a build up form. Do you want to short it at the lows of this channel? I don't think so, right? So now that price has come back up to this upper end of the channel. Okay, I don't trade channel personally, but this, if you want to short, right, I would say it's a much better trade location compared to shorting near the lows of a channel. And vice versa, if you're an uptrend, you don't want to be going long near the highs of a channel. Okay, so just a quick recap, right? Number one, right, when you are trading a trend continuation trade, you're looking for, strong preceding momentum, right? Looking for a build up or, a weak pullback with, narrow range candle. Then just trade the breakout. And a couple of things to take note is, number one, right, the best trend continuation trades occur when the market just break out of the range. Those are the best trades, in my opinion, because, when the market is in a range and it does break out, right, the market has a lot of potential energy that has been stored in the range and it wants to be released. So whenever there's a chance to trade a trend continuation trade, maybe there's a pullback, right, look to trade them in anticipation that, the trend will continue. And last but not least, right, avoid shorting near the lows of a trend channel and vice versa. Those are, I would say, low probability trend continuation trades, and it's worth, to avoid it altogether. So with that said, I have come to the end of this video, and I'll see you in the next.